with all the queries that you have been sending us. And we are now joined by Rajesh Agarwal, who's the head of research at AUM Capital, and also Hemant Kaparia, technical associate, DR Choksi FinServ. Hi, gentlemen. Thank you so much for joining us today. Welcome to the show, and let's get started with all the queries then. And the first one is coming on Trent. It is from Jayesh, who has written to us from Mumbai. Well, he purchased 200 shares of Trent at a price of 6,500. He wants to know whether he should buy more or exit. Rajesh, let me come to you first, and let's talk about the fundamentals as far as Trent is concerned. Heavy selling pressure is what we saw yesterday, nearly 8%. Do you think that is justified, or do you think fundamentals are still strong enough to hold on for the longer term?
Good morning, Kanisha. Good morning, Hemant. Yes, you said it right. Trend saw heavy selling pressure yesterday. And not only yesterday, even if I remember right, last quarter numbers, when it came, that time also there was heavy selling pressure. And that was just because of the miss. The numbers were uh, much lower than what expectation was. Street was expecting around 22 odd percent of revenue growth, whereas it came at 17% yesterday at around standalone revenue of 5,200 odd crores. There had been a declaration in growth, no doubt on that, in the last 2-3 quarters or so. But we should not forget that at a certain level, fundamentals become attractive, valuations become attractive, because previously it was trading at maybe around 3-digit odd P. And at this point of time, it will take forward P of the next 2 years down the line, trading at around 60 odd Ps. Even store expansion is being continuing. They added 48 new Zudio stores and 17 new Westside stores this quarter. Star Bazaar is doing, the hypermarket thing is doing very well. In this quarter, they moved into a lab-grown diamond store also. So things are in place. The only thing is the kind of growth which we have witnessed in the past is not being replicated now. So growth has slowed down, and that's why the cut in stock prices. But I think after this kind of cut, all the negative news has been discounted. And if somebody is willing to hold for maybe 1 year down the line, 15% upside from these levels is quite possible.
So if you're looking at a 1-year time horizon, maybe a 15% upside is what we could see. That's the word coming from Rajesh. But Hemant, let me come to you as well. Now, this viewer bought the stock at a price of 6,500, significantly lower than, higher than where the stock is currently at. And heavy selling pressure is what we have been seeing. What do you think for the short term? Do you think he will have to book losses, or should he continue to hold on? Some respite could be incoming.
A very good morning to you, Kanisha. Thank you for having me on the show. Very good morning to Rajesh. I have a feeling that the worst is not yet over. Oversold situation has developed, but it's probably not enough for a major reversal. A bounce, fine, because currently, Kanishka, we've come off from 5,700 almost to 4,000. So a 300-400 point bounce cannot be ruled out. As of now, 3,950 is a level to watch out for. If that breaks in terms of a weekly closing, then further downside seems to be on the card. So not looking very copacetic. So I'd say if you have an outlook for 2 years or more, only and only then do you hold. Otherwise, it's a sell-on bounce, because if 3,950 breaks, then I think it would be tested, maybe not immediately after the bounce. And that breaks, we'd have further downside. Just little bit of small advice to our investor. If the stock goes from 5,000 to 500 to 8,000, please don't touch it for 2 years. It takes time to recover. Fundamentals need to catch up. Technically needs a time price retracement. So if it's a multi-bagger, humongous like this, though the future is great, give it some time. So unfortunately, at the wrong time. Hold now if it's a long-term view, or sell on bounce.
Okay, so a sell on bounce is the call coming on Trent, and you could look at holding on if you have a fairly long-term horizon. That's the word coming from both of our experts, Rajesh and Hemant. But now we have a live caller joining us. This is Rajiv Ahuja. Hi, Rajiv. Thank you so much for joining us today. Good morning. Please tell us, where are you calling from, and also which are the stocks that you're looking to, have your queries answered on.
Ma'am, I'm calling from Ambernath, Thane, near Thane.
Right.
I got 2 queries.
Right.
Shall I go ahead? I was to buy Shakti Pumps and Coforge. Both are quite volatile stocks. I have been in this field since last more than a decade.
Right.
So it's confused. I'm confused. Coforge always comes back from 2,000 to again 1,600-1,700. So whether I should put some money or not?
Okay. So let's get a both tech and fundamental check done here. Hemant, let me come to you first. Do you think right price to enter, like our viewer Mr. Ahuja has pointed out, both of these counters have been very volatile. Shakti Pumps, for instance, it's trading just a bit in a percent higher right now, but in the past month or so, it has seen gains of more than 27% in just 1 month. That's the word on Shakti Pumps, and Coforge too, in where there the trend is opposite. We have seen a downtrend of more than 13%. So both of these counters have been pretty volatile in the past month or so. What do you have to say? Good price to enter?
If I were to pick and choose, I think not fair to compare stocks, but Shakti Pump looks relatively better than Coforge from a slightly longer term point of view. Short term, though, I think both look like bouncing. Shakti Pump should cross 800 and move up further. And as far as Coforge is concerned, Kanishka, a bounce is definitely underway, but there's a very short term view. From a longer term point of view, just one small observation. Coforge has turned back from the 2000 level 3 times over the last 2 years. 3 times. So I think one thing is very clear. There's a very strong resistance level. Till it doesn't take out 2000, nothing is going to happen. It's been range bound for some time. Notwithstanding the impending short-term bounce, I don't see any compelling reasons right now for a longer-term buy. I guess we need to review the situation later. Currently, no. We need more consolidation or more clarity as to when is breaking out about 2000, which isn't happening immediately.
Okay, so that's the tech check. Coforge needs to be reviewed a little bit later. Shakti Pumps right now looks better among the two picks. But Rajesh, what about you? What do you have to say about Shakti Pumps? Are the fundamentals strong enough? And Coforge also, we have seen over the past few quarters that mid-cap space in the IT basket, that has actually performed a little bit better than large caps as far as the growth is concerned. So just wanted to understand what are the fundamentals looking like? And since he has a long-term horizon of 3 years, are both of these counters good to enter?
See, taking one by one, if we talk of IT counters as such, I think the valuations of almost all of them, at least on the large cap side, are on a very attractive level because of the kind of balance sheet they have, the kind of order inflows which they have. They are moving into new areas like machine learning, AI, all those things. So I would be better comfortable going for large cap names like Infosys or a TCS for a long term horizon. Even in the mid cap space, there are likes of Persistent or Intellect Design, which can be held for 3 years down the line. Coforge at best can be considered as a trading bet for the short term, if not trading, at least for the short term, not for 3 years down the line. And as far as Shakti Pump is concerned, the numbers have been good. With the kind of monsoon which we had this year, I think the entire pump sector is going to do well with government's focus on rural infrastructure. That's again a positive point. They're moving into international seas also. So everything is in favor of Shakti Pump. I think a decent target of 800, 850 odd rupees in the next 1 year or so is quite possible. For a longer term, 3 year time horizon, I think mid cap name should be reviewed every quarter about the performance and all those things before taking a call for 3 years at this point of time. But yes, for the next 1 year, we anticipate a target of 800, 820 odd rupees.
Okay, so that's about Shakti Pumps, 800 to 820. That's the target on Shakti Pumps. But next question coming in from WhatsApp. This is Balakrishna Hegre writing to us. They have Happiest Mind shares. I mean, another case of significant declines. Their money has more than halved. They bought it at a price of 1,016 rupees. It's currently at 458. What would you suggest? He's asking, should he continue to hold it or exit and book his losses?
Frankly speaking, Kanishka, since it's peaked at 1550 plus a few years ago, it's in a constant downtrend. I don't see anything great happening on the charts yet. If things are to improve from a medium-term point of view, we need a weekly close-up of 490 for starters for the first technical green shoots to come in. Now that isn't happening, and it's slow pain, like you said, erosion of capital. So I say sell on bounce or sell if it breaks 450, because at least as of now, I don't see anything happening major in terms of a revival or a reversal yet.
Okay, so that's the view on happiest minds. A major reversal unlikely at this point. But it's time for a very quick break. But before we head into that commercial, well, this time of the year, all eyes are going to be on Budget 2026. And ET Now's Budget Yatra has rolled into Chennai inside one of India's key manufacturing engines. Automakers and tire makers, they've flagged tariff stress, raw material shortages, R&D incentives and inverted duties are some of the key concerns they want to be highlighted in this budget. And Jude is here to get us a ground report on the industry's budget wish list. Let's take a look.
On our Chennai episode of Budget Yatra 2026, join me as I hit the road and get a pulse of the movers and shakers of India's auto component sector. So from the impact of the Trump tariffs to supply chain bottlenecks, how is a 100,000 crore rupee industry getting by? And more importantly, what does the component manufacturing ecosystem want from Budget 2026? Find out all that and more on the Chennai episode of Budget Yatra, January 8th and 9th at 4 p.m. only on ET Now.
Hi there, welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar, and we are taking all your stock-specific queries with our experts. Rajesh and Hemina still with us to answer all of your queries. And now we have a live caller, next live caller on the show joining us. And this is Rajiv joining us from Pune. Hi Rajiv, good morning. Wishing you a very happy new year. Please tell us, what is the stock query that you have today?
Hi. Hi, good morning to you and the panelists as well as the viewers. I have two queries.
Please go ahead.
I'm a long-term investor.
Yes.
And I have invested in Dabur with thinking that Ayurvedic related consumption will grow, and it has not done as per my expectation.
Okay.
Also in IEX, expecting a good growth in power sector and being a new type of industry here. So it has not done well. So I wanted to know whether I should continue or exit.
Okay, so IEX and Dabur. IEX you've bought at a price of 166, I believe, and so witnessing, just very small amounts of profits over there, and a small amount of loss over there in IEX, and Dabur you're sitting with some bit of profit. Heymin, let me come to you first. What are the technical levels looking like? Of course, there are long-term investors, so we'll talk about fundamentals as well. But say over the next 6 months or 1 year, what are the kind of price targets that we should look at with respect to IEX and Dabur?
Okay, Kanisha, we'll start with Dabur. 5 years, the stock has done nothing. Around March 2020, when the entire market bottomed out at 7,500 odd for the Nifty on 23rd March. Since then, okay, there has been some appreciation, I'm not saying that. But basically, it's stagnated, hasn't done much for 5 years and doesn't look like doing so. So, okay, levels, I would say resistance at 550, 580, 610, and the major headache is at 660. So after 5 years, Kanishka, I will wait for a breakout to come in. Okay, short term, there is momentum. There's a medium term base which has been formed. There's a bounce in the offering which has already commenced. But after 5 years and a whole plethora of levels, they need to get overcome one by one, which I mentioned. So he'll have to be patient. Currently, it's not a sell because I believe we are bouncing and the bounce could get even more acute. What I mean to say, short to medium term picture has distinctly improved, and an upside is on the anvil. As far as IEX is concerned, Uh, I mean, stock has been a bit too volatile. I don't have that much of data to take a 5-year view like I have in Dabur. But having said that, short term, things are looking upbeat. 51 was resistance. We overcoming that. Next is 170. Further upside is on the way. So longer term levels are 177, 202, and 215. So hold both as of now, but neither of them look very hunky dory from a longer term point of view. Ganesh.
Okay, neither of them look very hunky-dory from a longer-term point of view. Dabur has been stagnated and we'd like to wait for a breakout after 5 years, and IEX that continues to remain very volatile. But Rajesh, coming to you, what are your thoughts? How are things looking fundamentally for Dabur? Do you think a revival is on the cards? And also for IEX, especially at this juncture with market coupling concerns or uncertainty that we are seeing as far as IEX concerned for now. If those rules come into play, it might lose its market dominance. So with keeping all of those things in mind, what is the 5-year view looking like for IEX and Dabur also?
Kanishka, as far as IEX is concerned, yes, you said it right, because of the news of market coupling and all. So it has almost fell by more than 50%, if I'm not wrong, in the last 1 year or so. And at these levels, I think even if it loses its market dominance, although things are not clear as yet because it's under judicial considerations and all. But still, I believe that all the negatives has been discounted in this, and the kind of numbers which we expect into this. Maybe a target of 175, 180 in the next 1 year or so is quite possible. As far as Dabur is concerned, the stock has done almost nothing for the last so many quarters, I would say, not in the numbers, neither on the horses side. So, it's better to switch to maybe names like Imami and Marico, which are also dependent on the rural economy, because Dabur, as we all know, is more towards the rural side of the business. Despite the fact that the rural economy is doing well, government's focus on that, monsoon good, common minimum price hike, that stock has done nothing. So it's better to switch from Dabur to Imami or America.
Okay, so that's the view on Dabur as well as IEX. Thank you, Rajesh and Hemin, for that. And hope, Rajiv, your query was answered from a long-term perspective as well. But now let's get back to some of the other queries that have come in. Now, this is Siva Reddy writing from Andhra Pradesh. They have 215 shares of RIL. They bought it at a very high price, 1239. And they're asking, should they hold or should they book the profit as they have right now? They're a long-term holder and can hold for at least a period of a year. Rajesh, let me come to you. What are your thoughts, especially with all the concerns regarding Russian oil going on? Yesterday, we saw a sharp fall in Reliance, more than 4.5%. Do you think this downtrend is going to continue? Should they add some more? And what are the long-term prospects looking like? Do you think that fundamental strength continues in Reliance?
Of course, the fundamental strength continues. These kind of news, Venezuela issues or Russian oil issues, are temporary to say the least. Reliance, as a stock, has run up quite a lot in the recent past, and it was just waiting for a trigger to correct, and that happened yesterday. Yes, Venezuela holds the world's largest oil reserves, raising concerns about crude oil price volatility. But if you look at Reliance as a company, the company is transforming into a deep tech company. They have launched Reliance Intelligence, delivering AI solutions, made strategic partners with Google and Meta. In telecom, they are shifting towards prioritizing value over subscriber volume. This is going to increase the EBITDA. Higher RPUs are expected because of price hikes, which is expected. In FMCG, they have already done 1 million outlets. New energy is the new in thing. Retail, they have 19,000 odd outlets there. And the best part is we expect Geo IPO in the next 6 months or so. So that happens, that will be another trigger. So this fall can be taken as an opportunity to accumulate for long-term investors. Short-term, there might be volatility that I can't comment on that. But for long-term, it's a very good buy.
Okay, so you could actually use this volatility and add on to Reliance. That's the word coming from Rajesh. But with that, we'll stop for a very short break. Be right back to answer more of your queries. Indian hotels under pressure after Morgan Stanley downgrades the stock to equal weight even as it raised the target price. The brokerage says the RevPAR cycle is improving, but upside is no longer surprising. EPS estimates for FY 26-28 cut on softer margins. Lock-in expiries triggered a mild pressure across select stocks today. Meesho fell 5% after a 2% lock-in expiry. Meanwhile, stocks like Aequius, Vidya Buyers and Tata Capital saw 1 to 2% downtake on the back of 2 to 4% stake being unlocked. M&M launched the electric XUV 3XO priced at 13.89 lakh, targeting urban buyers shifting to EVs. Offered in two variants, the SUV builds on the original model's success, which has clocked nearly 1.8 lakh sales since the launch. Hi there, welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar. And it's time now to go back to all of the queries that you have been sending to us. And Rajesh and Hemin are still with us to answer them all. So let's get back. We have Neeraj Verma, who has written to us about the banking space. He has two banking stocks and he's a very senior citizen. He's 81. 100 shares of HDFC at a price of 990. He's asking whether he should continue to hold or sell them at this juncture. And also Yes Bank. He's bought 1500 shares of Yes Bank at a price of 36 rupees. Hemin, let me come to you. What are the targets that we should be looking at for both of these counters, keeping in mind that they're a senior citizen, 81. So they want to understand, what is the 6 month to 1 month, 1 year time horizon? What are the targets that we could look at for this short term? And also we'll go to Rajesh for, how strong the fundamentals are for both of these counters.
Well, Kanishka, I'm saying I had in the past tense, reasonably, if not quite bullish on HDFC Bank. Now we've spent 7 months over here, which seriously looks suspiciously like a distribution over here. Well, things haven't gone underwater yet. 940 is very important level, Kanishka. This is a range for the last 7 or 8 months. 940 on the downside, 1020 on the upside. So if this breaks, and right now nothing looks good, short term, medium term, and like I said, even the longer term charts are coming under pressure. Now, at the beginning of the month, I can't get bearish on the monthly charts because they need to end on 31st January. Things could change a lot till then. So as of now, nothing very positive. Targets for a month. I don't think I have a target for a month because I'm waiting to see whether 940 holds. If 940 holds, stabilizes at the first small positive, that breaks, I think we're going to 910. So I really don't have a target as far as HDFC Bank is concerned from a 1 month point of view. And the bigger picture is just about taking a hit. So unfortunately, technically things currently are not in great shape, Kanishka.
Okay, so technically things not looking in great shape for HDFC Bank. But Hemin, what about Yes Bank? His buying price is 36 rupees.
Okay, not fair to compare. It's like Vodafone Idea. I mean, last 5 years, the stock has done nothing, maybe even 6 years. Intermittently, there have been buy and sell signals, no doubt. Short term, it's looking good. Medium term, there's a medium term bottom in place. Further upside seems to be on the cards. Long term, there is a revival. Now, like I said, signals have come multiple times. They haven't fructified yet. Maybe it's a question of crying wolf, but this time things are beginning to look better. About 24 and a half, I believe further upside seems to be around the corner. It's going to be a slow and painful affair, but at the risk of sticking my neck out, I believe further upside is down the line, and a level of 30 from a 15-month point of view cannot be ruled out. Things are just looking a bit better now, Kanishka.
Okay, so HDFC 940 on the downside. That's a very key level to watch out for, and we'll see how things go from there. That's the word coming from Hemin. And on Yes Bank, it could be a slow and painful affair, but yes, some upside looks likely in the near term to medium term for that matter. But Rajesh, what about the fundamentals? Are these two strong enough still?
We're taking one by one. HDFC Bank, it has become one of the 10 largest banks across the world after the merger. Doing very well. Asset quality is very good. They have been reporting decent growth, I would say, quarter on quarter. And the best part is we believe that in FY26, that's this year, they are going to report a profit of around 80,000 odd crore. So that gives a very compelling reasons to buy this for a long-term horizon. The only issue in the short term is the AD ratio, which is on a very higher side. So management has categorically said in the last con call that they are going to reduce that, but nothing has happened as yet. So that is the only concern in the short term, but for a longer term horizon, it's a very good buy and somebody holding, as far as the gentleman who is a senior citizen is concerned. I think these kind of stocks give a very stable kind of uh, returns in the longer term.
Okay.
Yes Bank, the numbers have been improving quarter on quarter for the last so many quarters. I think whatever has happened in the past has been left behind, and now the performance is improving. And with the change in hand in the top, I think it's high time it's moved to around 30, 32 odd rupees in the next 1 year or so. So both are a hold from our side, and somebody willing to buy according to his risk appetite can put more money into Yes Bank too. And SDFC Bank is a buy.
Okay, HDFC Bank remains a buy, and you could also look at adding Yes Bank. That's the word coming in. But Rajesh, another query coming for you. This is on IRCTC. Suresh writing from Ludhiana. They are a long-term investor. They're holding about 250 shares at a price of 804 rupees, and they say that they bought it sometime last year, but since then there has been no growth, sitting with significant losses right now. What do you think should they do? Should they continue to hold on, or should they book their losses right now? What are the fundamentals suggesting?
Kanishka, this is the very beauty of the market. It surprises on a very unexpected thing, I would say. IRCTC is fundamentally a very strong company. All the four divisions, be it ticketing, rail, near, catering, or tourism, are doing well. In fact, in three of the divisions, have the monopoly in the company. Debt-free company. With the launch of new Vande Bharat and the other trains, the company is going to gain well. But it has been very painful from the last 1.5 years. The stock has done nothing. But fundamentally, it's a very strong company. And I think now it's high time it starts performing. The valuations are also very attractive. So at these levels, one can even add for a target of around 800 odd rupees in the next 1 year.
Okay, so valuations look attractive. You could also look at adding right now. That's the word on IRCTC. Strong fundamentals over there. Let's move on and have another query answer. Now, this is Krish writing in, and their query is for Hemen. They are holding MCX India, 20 shares at a price of 1670. He wants to hold it for a slightly longer term. Hemen, what are the targets that you think we should be looking at, and how long would you suggest that they continue to hold on to it?
We are safely ensconced in a longer term uptrend, Kanishka. And by this, I mean at least, 5 years and counting? Recently, we've seen a stock split from 10 to 2. But on all time frames, we remain in an uptrend. I don't have any levels because even today we posted a fresh all-time high, Kanishka. It's a clear blue sky, no known hindrances. I think he can afford to hold. Safety sake, if you want to use a protect profit, first level is 2160, the second level is 2100. By that I mean to say, if these levels break, you book your profit and exit to see, protect your capital. But otherwise, I don't see anything wrong in the stock despite such a massive move. So things are fine. I don't have a target on the upside yet, but it looks like a hold keeping these two levels remain unscathed.
Okay, so that's the word on MCX. But Rajesh, coming to you, we have a query coming from Mohit, writing from Ludhiana. They're holding Concor shares, 200 shares, buying price is 512 rupees, and they're looking at a slightly longer term horizon, that is 3 years. Right now, they are sitting with some bit of profit, now that the stock is trading around 531. But what about the long term? In the past 6 months or so, the stock has given up, more than 11%. Do you think an upside is likely over the 3 years? What kind of an uptrend could we see as far as the 3-year time horizon is concerned?
See, of course, for the next 3 years, the stock can give very good returns. Based on the fact that one of the larger logistic companies in the country doing very well, the lease agreements with the railways has been renegotiated, and the kind of opportunity there is into logistics is a very compelling uh, case for investment, I would say. At these levels, I think all the negatives have been discounted, and 650, 680 odd levels in the next 1 year is quite possible. And in the short term too, as it has been in the past when we approach budget, these kind of companies start performing. So somebody looking for a short-term horizon can keep a target of 570, 580 odd rupees. But for longer term horizon, it's a hold.
Long-term horizon, it continues to be a hold. That's the word coming on Concord. Well, that was the last query of the day. Thank you so much, Rajesh and Hemen, for joining us and answering all of the viewer queries that they have been sending to us. Great having you on the show today. All right, with that, time for a very quick break. We'll